Well, at Fundstrat, we're going to approach it like a serious move. We conducted a webinar for our clients yesterday, and Mark Newton made a strong point about how this is a really substantial breakout because we've moved to levels where a much larger pullback is expected. At that time, he was discussing how many of these equities were getting close to multi-year highs. So I'm guessing Chinese internet stocks? Indeed, such as KVEB, KBA, FXI, and our own, the United States. Therefore, for those with $6 trillion in cash on the sidelines or little leverage, this now appears to be a really good way to. Yes, if I were to measure the difference between the perception of macro and the logical macro, it would be enormous, because I believe that many people believe that this is a late cycle business cycle, an expensive market, and an extended rally. However, a large portion of what you can identify is early cycle, which is a good thing. What is considered early? For example, there has been a recession in the housing market. There has been a downturn in durable goods. They've been acting as though they've been in a recession, assuming you appreciate cyclical transit surges. Therefore, I believe that a significant portion of the economy has been in a state of recession, and those who are skeptical have been speculating that this would cause the entire economy to enter a recession. Instead, I believe the Fed is becoming more dovish, and this year's stock market is reflecting mid-cycle rather than the Fed cut estimate of 125 basis points by year-end. Tell us what we are looking at and why you think it is essential. Yes, there are a number of economic sectors represented here, including credit card rates, auto loans, home equity lines of credit, adjustable rate mortgages, and small business loans. And when the Fed cuts, we're demonstrating how much these things will fall. Well, given the size of the mortgage spread today, this is underestimating what mortgages will do. Yes, it is really broad. In fact, I believe it has historically ranged from 170 basis points to more than 200. Indeed, it may decline by nearly another percentage point. What is the current 30-year fixed mortgage rate? Which is better, the 30-year fixed rate or the 10 funds rate? Thus, the mortgage spread normalizes while the 10-year stays the same. It will be less than 5%. They were never dependent on overnight rates, so that might not be the case this time. How do you feel about the concept? Tiny caps? Yes. In my opinion, the Fed warned the corporate community in 2022 that a hurricane was on its way. Yes. Businesses became cautious as a result, and those with plenty of money, in my opinion, fared well. The expense of money truly caused little caps to be destroyed. Isn't that absurd? Hey, we're putting the brakes on. Get ready for a recession. The Fed or the government declared. All right, we'll get ready for a recession. The corporation said. No recession. Yes. Additionally, 5% of the capital stock depletes due to obsolescence, as you are aware. 5% of buildings fall, even for tower firms. Deferred expansion has resulted in higher hiring because deferring capital expenditures actually results in more jobs. Therefore, I believe that there are mergers that have essentially been put on hold in addition to deferred capital expenditures. IPOs as well. Capital markets indeed. Additionally, there are likely a lot of things that could be done right now that boards can endorse with some degree of confidence. It will therefore be rather expansive, in my opinion. However, small caps should undoubtedly benefit the most because they received, in fact, if you simply did lucrative, it's about 12-something. All right. And it's almost 18 times currently in the S&P. Yes. Thus, the multiple expanding alone might give you an 80% move in the Russell. All right. There are other ways to profit from the Russell, though, as earnings are increasing more quickly and usually trade at a premium. There was a storm of some kind that caused companies to close, so he predicted that the claims would become a little wild. Therefore, I believe that portion of this was due to seasonality rather than isolation. Do you recall how strange the labor reports were back then as well? Indeed. I apologize, I do recall that increase, and I do recall rescinding her rule. Yes, she deserves credit for setting it off. She said yes, so good for her. Here, what are we observing? You have a chart with a number of the components of CPI back at pre-pandemic levels. Indeed, it is correct. According to the red line, 50% of the CPI components were historically below their long-term average prior to the pandemic. Whoa, what a surprise! That indicates that inflation is under control. As you can see, we reached 50% in late 2023, and that percentage has since slipped to 55%. Thus, we are the world and the data center by this metric. Power must therefore be established in this area, or perhaps in the Middle East. Who knows, really? However, correct. They both move in lock. That theme appeals to you? Do you think that topic is true? Since there are three sources of unusual power consumption, we actually had our summer interns study on that issue. The first is electric cars. The second is artificial intelligence, data centers, and energy intensity. And the third is cryptocurrency. All right. Digital currency, you know. Since I don't actually know the exact figures, all three will be kind of tailwinds for the cons. All right. However, the study's conclusion was that this subject has traction. Indeed, it is energy generation and cooling, and it may even involve ceramics and other methods to maximize energy production or cooling. However, all have to do with power efficiency. What would Mark Newton say about the technicals and internals if he were seated here? Let's get this done. What proportion of members are above 200 days? Yes. Alternatively, it's a test because if it passes, it gets stronger. All right. When you're like the internals, do you find the behavior of stocks inside the indices to be significant? I believe that the internals are crucial in general. I believe that people occasionally misinterpret internals. For example, the market was criticized for a long period because it was dominated by 7 stocks. However, that wasn't a show of weakness at all. I believe it was simply, if the market were narrow and everyone was completely invested, I believe the dynamics would be different because you would realize you were running out of oxygen. However, we have a lot of money lying around. Margin debt remains lower than in 2021. There is firepower then. China is now changing, and the Fed is becoming more conservative. So it's like you say, Michael. If my understanding is correct, the Russell 2000 has underperformed the S&P 500 by 5.7% a year over the past 5 years. The greatest underperformance since the height of the dot-com boom. That's right. And take a look at what transpired next. Yes, if there is a chance for the multiple to catch up, such as through Fed cuts, mergers, regional banks, biotech rallying, etc., then that should be the counter-argument, unless you can essentially prove that small caps are now worse businesses because the valuation gap is 8 points a multiple. Therefore, tiny caps ought to be doing better. Yes. Furthermore, you're referring to a dollar multiplier since, as I recall, Dan Ives stated that after AI spending, there are like $3, $5 in non-AI spending. Indeed. And whether it's infrastructure, employment, software, services, or advertising that makes non-AI expenditures possible as a result of earlier AI expenditures. Yes, exactly. Yes. Furthermore, as you are aware, China has been inactive for a considerable amount of time. Additionally, there is a relative outperformance cycle of several hundred basis points annually. And investors had a terrific time because they could locate many excellent stocks at that time. It is now quite evident that the opportunity is much greater and the competitive position is much stronger. Finally, I check at the stock and see that it is pricing at less than 1 times the rise in earnings. The other so-called Magnificent Seven are selling at 1.9 times their average profits growth for the upcoming year, if you were to average them. For this reason, we believe we are facing a significant opportunity. Even at these levels, the company is performing well, and the value is highly attractive. Let me ask you this. Nvidia is performing great today, but the stock of the other semis is down and they are truly having trouble. How does that make sense? Yes, Skelly, I believe we had the start this week.